Hello and welcome to this video in which I'm going to explain how turnover works and profit works. And this is dealt with in chapter 4 of Buying and Working Economics of LWEO and is suitable for children of 3 HAVO VWO. So, in chapter 4, it says an enterprise of your own. So what we're going to have a look at is when I have my own company and I would like to sell things, how this works with turnover, the purchase value of the turnover, gross profit, other operating costs and the net profit. Yes? So suppose I have a company and I would like to sell things. And in the book it says that Manuel, he sells tacos and wraps and tins of soft drinks, so let's go with that. Well, the first thing that you have to determine is your so-called sales. And your sales are the number of items that you sell. In Dutch the word is afzet. Well, the number of items that you sell compared to the price that you ask for it, so the selling price, is your so-called turnover. And the turnover is everything that you get from the things that you buy, so the money that you get from the things that you buy. Well, if you sell things, you have to buy them first. So what we're going to have a look at is your sales again, because I would like to know the profit that I made on the things that I just sold. So I have to compare those sales with the price that I paid for it. So I take those sales and then I take the purchase price. And I have the purchase value of the turnover. The book refers to this as well as cost of sales, so it uses two terms for the same thing. Yes? If I take my turnover and I subtract the purchase value of the turnover, so the money that I receive minus the price that I paid for those things that I just sold, I get the so-called, so here, this is for the subtraction, the so-called gross profit. And this can be a bit confusing. So the purchase value of the turnover is determined by the things that you sell. So you want to know, what did I pay for the things that I just sold? Yes, so purchase value of the turnover is what did I pay for the things that I just sold. So you shouldn't confuse them with your purchases, because that works differently. So suppose this square is your company. All the things that are coming in are your purchases, and the things going out is the purchase value. Yes, so the purchase value is everything that goes out of your company, whereas the purchases is everything that comes in to your company. So those two can differ. So you can either buy more than you actually sell, or you can buy less than you sell. Yes, so that makes your stock go up and down. Yes, but you have to know that those two are not necessarily the same. You can imagine this is not the end profit, so to speak, because if you have your own company, like Manuel does in the book, he has some other costs as well. We call that the so-called other operating costs. Yes? Those are all the other costs besides your purchase value. For example, if you have an energy bill to pay, if you have to pay people wages, the internet charges, and so on. So all the other costs, so in Manuel's example in the book, is the rent for the food truck as well. Yes, so all those costs, you pile them up together and you call them the other operating costs. Well, if you have your gross profit and you subtract the other operating costs, you get your so-called net profit with an R. And the net profit is the profit that we discussed in an earlier chapter where we talked about the primary incomes, yes, such as wages, interest, lease, rent, and profit for an entrepreneur. This is the profit on which you have to pay taxes as well. So this is what you have left at the end. So this is your final profit. Well, what you have to take into consideration is you have your turnover minus your purchase value of the turnover is your gross profit. So this is the minus. And then your gross profit minus the other operating costs gives you your net profit. Well, hopefully you get a grip on the profits a bit more now, and hopefully I'll see you back soon enough. Cheers.